Alright, so today's the first lecture of the FAC1601 support material. We're looking at the weekly lectures. The first bit that I'm going to take you through is just a bit about the background. Okay, so obviously the provider for the actual weekly lectures is Creativa Solutions. That's the mission statement and the values. There is quite a lot of information on the website as well, and I'm posting more YouTube videos that are available publicly for the basic accounts. So I've created a accounting for non-accountants video series. Currently I've uploaded 3 of the videos. I'll be uploading a video a day to help students with the basic principles of accounting. So today's lecture is all going to be about basics, fundamentals in terms of the theory. You would have seen I spoke about the importance of FAC1601 as being a prerequisite for this module. You'll see none of the content that you covered in the previous module is covered in this one, but all of it is necessary to do the questions in terms of the assignment as well as the actual exam that you'll write at the end of the semester. So it is a very, very important module, and it can be quite difficult or tricky or challenging if your basics aren't too good. Alright, so we're obviously going to have interactive classes weekly. I'm going to walk you through the sample questions and examples. Alright, so we'll be looking at a lot of those examples to show you how to actually get the answer. Right, UNISA has given you a study guide with quite a lot of examples, so the study guide is really good. Compared to the other study guides that I've seen from a UNISA point of view, the one that they've created for the FAC1601 is really, really good. Alright, so please use that study guide a lot in terms of the actual examples, and then refer to the assignments and the past papers to get more practice. And we'll do most of those together at a later stage. Okay, and then I am available, so if you need any assistance, just send me a message or WhatsApp or Skype message, or even just leave a question and I'll get back to you. So let's say you guys are busy doing some work in your own time and you've come across a question that you're not too sure about. Maybe just take a screenshot of it or make a note of what the question number is, and then just send me an email and say, well, please help me with this particular question. I'm not too sure how to get to the answer. And we can communicate via that particular leave a question service as well if you have any problems. Perfect. Alright, then in terms of course material, alright, so you've got the study material provided by UNISA. So they sent you this. Let's just open up. Okay, there we go, that's one. Alright, the tutorial letter. And in the tutorial letter they explain a bit about the background of the course. I just want to show you this page over here. Okay, there we go. Alright, so the study material, you've got the one study guide which they've provided, and then they've given you tutorial letters. I see they've actually given you errata already so early in the semester, which is good. Normally they don't. They normally give that errata later on. So that tells me that they've actually had someone check the material in terms of the assignments to see if everything is correct. And there's already a few mistakes that was picked up, and they've obviously sent you some errata for the course already that you guys actually sent through to me. Right, the prescribed textbook. Every year they prescribe the newest edition. So in the 2017 tutorial letter, they're prescribing about Financial Accounting Volume 2. You guys should be familiar with Volume 1, which is what you used for FAC1602. Don't get rid of that textbook yet, because you're going to be needing it, as I said, for this module, because all those basics that you covered there are repeated here, but taken a bit further in terms of different forms of ownership. Right, so we won't be looking at a sole proprietor, we'll be looking at other types of businesses, so partnerships, companies, CCs, and so on. Right, in that particular module, all the basics were covered, but you're going to use all those basics in this one. Right, so there's the 6th edition, which you can get. That's the newest, which is what they're prescribing. You can also use some of the older editions. I've looked at the material. You can see this is the 2017 study guide. And if you look at the contents page, there are 10 study units here, and all 10 study units are the same as previous semesters. Okay, so they haven't changed the content. They have included 1 or 2 additional examples, and they've improved the questions and answers. But in terms of the actual content, you'll be fine if you've got an older edition. So it doesn't matter if you've got 4th, 5th, or 6th edition, or if you're looking to get a second-hand textbook, or if you know a friend or family member that has done the course before, if you've got one of the older textbooks, you can still use that textbook. You don't have to get the newest edition. If you are buying new, then obviously get the 6th edition, because at least then you'll be able to sell that to a student maybe next semester once you've passed this one. Okay, any questions so far?
No, nothing so far.
Okay, perfect. All right, so if we go back to the notes then. Alright, so we spoke about the study material. You do need to try practice as much as you can for this particular module, purely because it's practical. So practice is definitely going to help you pass. The financial calculators, I've put a note here in terms of the Casio, purely because it's the easiest calculator to make use of in terms of calculations. Okay, the user interface is really simple. So I would suggest you get the Casio if you haven't got a financial calculator yet. The HP and Sharp are also good options. UNISA normally recommends the HP and Sharp. The Casio is an alternative that you can make use of. Have you got financial calculators already?
Yeah.
Which ones do you have?
It's a Casio, but I've also just gotten that HP.
Okay, so HP and Casio. Okay, perfect. You've got 2. Great. And Kirsty?
I've also got the Casio.
You've also got the Casio. Okay, great. All right, so you guys both have the same calculator. You've got a SPEAR as well, which is the HP, which is great. Okay, so the assignments are due later in the semester. The one is due in the middle of, I think it's 13th of March, and the other is on the 11th or 10th. I think it's the 10th of April. So that's assignment 2. So we'll go through those at a later stage. We obviously need to cover as much of the theory first, so we'll be able to practice using those assignments. Right, you've seen the slide before in some of my other modules. Remember to try pre-read if you can. The textbook is very good in terms of giving you additional information and theory. So you'll see the study guide that UNISA has given you is better for looking at example questions. So they've given you questions and then they've given you answers. That's great for practicing. Then the textbook is great for theory. So the textbook is a lot more comprehensive in terms of giving you more background information about the actual theory relating to partnerships or CCs or companies. From an exam point of view, you're not going to be tested too much on theory. What they have introduced recently, last semester, they've put multiple choice questions into the exam. Before, the exam was purely written and it was purely long questions. You probably would have noticed that in 1502 as well. They've given you a few, I think it was about 5 or 10 short MCQs. You'll see the same thing in the exams that are more recent. Okay, so last semester they started asking short questions. I do suspect they'll probably ask short questions as well this semester and obviously semesters going forward. Okay, so I hope you guys have printed your notes and you've got the notes in front of you.
Yeah.
Okay, great. So if you can, try and make a few additional notes to the actual slides. You've got all the notes, so add points that you might want to in terms of the answers to some of the questions on the slides, or even try and make the notes more of a more comprehensive in terms of some of the examples that we've covered, okay, or that we will be covering. But if you have any questions, stop me and ask. It's always important to address questions that you might have so that you will be able to do all the calculations. Okay, as I said, this module is slightly more challenging than the previous one because there's a lot of assumed knowledge. Okay,
Yeah.
So I've got a few questions here that I want to ask you and I want you guys to answer later. Okay, I'll give you some time to answer them. I want to see how much of the FAC 1502 you're actually still familiar with. It's been a while since you've actually completed the module, so it might be maybe a bit rusty in terms of recalling some of the information. So I'm going to start general here in terms of some of the basics. So what is accounting, why is it important, where is it used, should we follow the same rules, and then what is the conceptual framework. Okay, so 5 questions. Maybe take 5 minutes and answer those questions, and then we'll look at the theory. Okay.
Perfect.
All right, so let's start with Brogan. Brogan, what is accounting?
I said accounting is the numerical information a company needs to see their financial status.
All right, good. Okay. And Kirsty, what did you say?
I said that it's a process of keeping financial accounts.
Okay, good. So yeah, record keeping is key as well. All right, so accounting, you could also define it just as a language of doing business, because remember, we're trying to understand what the actual accountant had created in terms of the statement. So the statement is the end product, and the accounting would be all the rules and processes, all that background information that actually leads to that final result or the final output. Okay, the output we obviously want is the financial statements. Okay, so why is it important?
I said it allows the company to see how the company is performing throughout the financial year, as well as their financial status, to see if they're in a profit or loss.
Okay, nice. Okay, good. So the key would be information, and what do we do with all that information?
You make financial statements, your day-to-day business.
All right, so decision making, hey?
Yeah.
All right, good. So the importance would be the decision making. So we've got these financial statements. We're going to be using the information, and now we can make a decision. Is the company doing good? Is the company doing bad? Do we need to improve certain areas? We obviously need to find out by getting that information. So where is it used? Kirsty?
I said that it's used in all forms of businesses.
Okay, so yeah, accounting is widespread. Government uses it, public, private companies, partnerships, sole proprietors. It doesn't matter how big or small the business is. If you're running a business, you do need to keep accounting records to show what has actually occurred, because you're either going to have to report that for users in terms of the owners of the business, or you're going to have to report that information for external users. So in your previous module, we spoke about internal and external users. We spoke about people like employees and directors and managers. They're internal. They need accounting records to make decisions internally, and that's more detailed. So you probably remember management accounting, right? Those are your MAC subjects from a UNISA point of view, and then you get the FAC subjects, which is the financial accounting, and those cover the external. So you get internal and you get external. Right, so should we all follow the same rules?
Yes.
Definitely. All right, we can't follow different rules. We need to follow the same rules. So what is the conceptual framework then?
I said the rules and standards that are set and the financial statements.
Okay, good. So the standards, you mentioned an important word there, because remember, those standards are part of the IFRS. In this semester, this particular module, you weren't asked to get the statements yet. From second year onwards, you are going to have to purchase the IFRS textbooks. It's those huge textbooks. They're thick. They're about 1,000 pages each, and they cover all the important rules behind the scenes in terms of the framework. So a framework is almost like the basis in terms of how we actually approach different scenarios. So if you're ever stuck in a situation where you're not too sure how to approach a situation or a transaction, you normally refer to the theory, which is the conceptual framework, which is provided by the International Financial Reporting Standards, okay, IFRS. Okay. All right, good. So the theory seems quite good. You're pretty comfortable with those questions there. Let's have a look at the next bit. Okay, so the introduction. We spoke about accounting and what does it do. It records the business transactions in order to provide useful information for decision making. Decision making is key, and we need to look at the past in order to make a decision going forward. And that's why there's evidence of economic activity. So from an exam point of view, the evidence of economic activity will normally be a trial balance.
Yeah.
Because you're not looking at recording transactions. All of that has been done for you. If you recall FAC1601, you started with things like journals and ledgers, and then from there you moved to the trial balance, and then in the last or one of the last study units, you were actually tasked with the activity of creating the statements. In this module, you're starting with the statements. So now we're not going to be looking at all the journals and ledgers and all of that. We're going to be looking at how do we actually disclose information. So the most important bit in this particular module is the actual communication of information, and that's the disclosure.
Okay.
Do you remember what disclosure means?
You're disclosing the information that's needed for the company.
Yes, okay, so disclosure is presentation or layout, it's that format. So in 1502, they gave you templates of the statements in terms of the statement of financial position, statement of comprehensive income, and so on. In this module, the disclosure is emphasized even more, so you do need to be very familiar with the actual presentation, because you do get assessed according to that as well when you actually create your answers in the actual exam. Right, so again, they're not going to give you templates that are pre-created for you. You're going to have to draw up those statements yourselves in the actual exam, which can be viewed as being maybe more difficult or easier depending, but you do need to be quite familiar with what those statements actually look like, because you're going to have to produce them when you get assessed.
Yeah.
Okay, so who uses them? You gave some examples. We spoke about internal and external users, and then we also looked at a bit about businesses, so forms of entities. Can you think of different forms of entities or businesses?
Oh, like closed corporations and that?
Yes, that's one.
Oh, it's sole proprietors,
Two.
PTR limited, closed corporation, partnerships,
Good. Okay, so sorry, yeah, say that again.
NGOs.
NGOs, good. Okay, so NGOs you covered in 1502. You're not going to cover NGOs again. This module is looking at the ones that you haven't covered.
Okay.
Now we've got the definition again. For accounting, we know it's a language for conveying information. All your statements are going to be in rands, okay? And why do we need to understand the language?
Because we have to use it in day-to-day business.
Yes, and we need to create standard financial statements. So when I say standard, we're talking about uniform. So if we've got two different companies, let's say we've got company A and we've got company B. If both companies are following IFRS, should their statements be similar?
Yes, they should.
Yes, they should. Okay, obviously A might be doing better than B, or B might be doing better than A. It doesn't matter how well they're performing. Their statements should be the same in terms of the way that they were prepared.
Yeah.
Right. Obviously, reporting is key. So A and B both have to create statements in line with the rules, in line with that language. They can't be speaking a different language. If they are, no one's going to understand what the information is actually trying to communicate. And that's why we've got those basic principles. Okay, and this is revision from the previous module. You should be familiar with the nature of accounting in terms of the principles, okay, those basic elements, those rules.
Yeah.
Right, so again, just a bit of revision here. Nature of accounting focuses on the end result, which is obviously the financial statements, and we need statements in order to make decisions. We'll have input, we'll have processing, and we'll have output. So how does this relate to you in terms of an exam point of view? Well, your output is going to be your answer, your solution that you're going to be creating. UNISA is going to give you input, and the input would be in the form of a trial balance. You'll see trial balances a lot when you look at past papers, because you're not creating the journals and ledgers, you're actually creating the end result, which is the answer, which is this, the financial statements.
Yeah.
Okay, and then the processing is what you need to do to get from trial balance to answer, which is disclosure. Okay, so you're going to have to then look at adjustments. You're going to have to look at disclosure in terms of presentation and layout and format, and you're going to have to look at processing different transactions that may or may not have taken place in terms of maybe things that were left out, or things that you need to change, or things that you need to adjust. Okay, the cycle is important in terms of background information. They do expand a bit about that in the actual textbook. In chapter 1, it's intro. A lot of it is recap from the previous module, and then they'll obviously look at the disclosure in chapter 2 onwards. Okay. So there's the note that we've looked at in terms of different forms of ownership. You mentioned the 4 different forms of ownership. Are they counting, or will the accounting be the same for all the types of businesses?
Yes.
If you say yes, why?
Well, they're going to have the same set of laws and rules that they have to apply, but their accounting will be different, their financial status will be very different.
Perfect, that's correct. Okay, so the rules will be 100% the same. Right, so that language. But the way that we use the language is going to be a bit different. So that would be the disclosure. Okay, so that's important. That was a good answer. So if we're looking at the rules, an asset is an asset. It doesn't matter who has the asset. A sole proprietor can have it, a partnership can have it, a CC can have it, a company can have it. It makes no difference. An asset will always be an asset.
Yeah.
But the way we disclose the information could be quite different, because a sole proprietor would have different assets than a company. Okay, or a CC. A CC will have different assets. A partnership will have different assets. Okay, so that's the disclosure. So yes, the rules are the same, but the disclosure is slightly different. Okay, even if you look at the format, you'll see later when we look at each of the different forms of ownership, all are going to have slight changes in terms of disclosure, but all of them use the same rules. It doesn't matter how far we take our accounting, those rules will always stay the same. Okay.
Yeah.
Perfect. All right, then we've got 2, 3, and 4 here. This is your focus. Partnerships, closed corporations, and companies. From an FAC1601 point of view, that's important. You're not going to see sole proprietors or sole traders. You're going to be seeing the other forms of ownership. Are they a separate legal entity? Well, the answers are here. Not separate, and then we've got 2 that are separate. What does that mean, separate legal entity?
When it's separate, they have to... Isn't it when they're in financial shifts that the partners are going to have to separate what they have to give of their assets?
Yes, okay, so assets are separate in terms of, do you agree the partnership? The partnership is the partners, yes? Do you agree?
No, I do agree.
Okay, so for example, a sole trader, the business owner is the business, yes?
Exactly, because he's the only owner.
Correct. And in a partnership, the partners are the business, yes?
Yeah, because they're together.
Good. But what happens with a CC in a company? Are the employees the business?
No.
No, good. Okay, the CC is separate, the company is separate. And that makes a big difference when it comes to the actual accounting. Okay, and when we go through the different modules, you'll see that quite nicely. You'll actually see how the accounting works when you have a partnership versus a CC or company. It's quite different because the one, they're not separate, and the other, they are.
Sure.
So will these types of businesses follow the same rules?
Yes.
Definitely. Okay, that's a given. Great. Okay, so the rules that we spoke about obviously come from somewhere. Okay, so right at the beginning, I gave you some questions to answer. You mentioned how important standards are. Standards are key because they set the rules, the how-to. So if we ever want to know how to do something, just refer to the rules. And the rules will tell us how to treat it, how to recognize it, how to measure it. And the policies are also something that can give us information in terms of what basis are you going to be using as part of your recognition and measurement. Okay, so I want to give you one example. Let's think about a policy that relates to inventory. What is inventory? Do you remember?
Inventory is your stock.
Good. How can we account for inventory? Is there one or multiple ways of accounting for it?
Isn't there perpetual and periodic?
100%. Okay, so you've either got the perpetual or the periodic system. And those are the policies that you're going to be implementing. So can a business record inventory using the perpetual and the periodic system?
No, they have to use one or the other.
Correct. And that's where the policies come into it. So when you look at financial statements, we just said inventory is an asset. Inventory can either be recorded using perpetual or periodic. You can't use both. And that's a policy that the actual accountants are going to have to present or disclose rather to their users. Because remember, users are going to want to know, well, what policy have you used to account for inventory? Because if I use periodic, the calculations are very different to perpetual. Do you agree?
Yeah, very different.
Great. All right, and things like that become more and more important going forward. So in this module, they ask you a little bit about the policies in terms of the actual notes. So we spoke about notes in the previous module. You'll see more notes in this module. When I talk about a note is a working that you use to attach to a calculation. So it's almost like a reference. So a note that you guys are familiar with, property, plant and equipment, PPE, right? Do you agree?
Yeah.
PPE is a note.
Yes, it is.
Okay, so that note is going to contain all the detail, and that detail will be summarized in the financial statement. Which statement would you put the PPE in?
No, I was going to say statement of comprehensive income, but it's not.
It's the other one. What's the other one?
Oh gosh.
Okay, remember the basics? Okay, PPE, what type of account is it?
It's a non-current asset.
Correct. So if it's an asset, where do we put our assets?
Gosh.
Kirsty, do you know?
I forgot.
Okay, financial position, hey?
Yes.
Okay, statement of financial position. Assets go to the statement of financial position. Okay, so things like that we'll be looking at, and we'll actually disclose that information as well. So you're taking the disclosure a bit further. That's the point I'm trying to make with this slide is, yes, the rules are all the same. Inventory is inventory, PPE is PPE. None of that's going to change. But the disclosure will change slightly, and that's why I've got a note here in terms of the IAS1, which is the statement that describes the disclosure for a particular type of business. So a partnership, a CC, a company. Those are the three that we'll be focusing on in this module. Obviously, IFRS we're familiar with, so I've put it here on the slide as well. And then the accounting standards come from the actual accounting, IFRS. Okay, the accounting standards are part of the IFRS. You've got different standards for different things. So IAS 1 is just one standard from the actual disclosure. Okay, any questions so far?
Nothing.
Okay, great. This is important. Do you know how important this is? Okay, you've done FAC 1502 with me, so I'm glad that you have the background, okay, in terms of the rules. So you've seen this before. It's not the first time that you've seen this. For some of the other students that will be watching this, they're not familiar with the actual rules. Okay, you guys are. So remember, rules are important. Why are the rules so important?
Because you have to know which one goes on the debit side and which one goes on the credit side.
Okay, yes. Besides the debit and credit, do you agree, if you know what something is, will you know what to do with it?
Yes, you will.
Yes, you will. Okay, so that's always the first step. The first step in any question is to identify your elements. And what did we say the tests and exams are going to give you? A trial balance. And what does a trial balance have?
Debits and credits.
Yes, for different accounts. So in the trial balance, you could see 10, 20, 30 different accounts depending on how long the question is. Are all of those accounts going to be part of the accounting elements?
No.
Yes. Okay, accounting elements, do you get more than these 6 elements?
No.
No, you don't. Okay, these are the only 6 that you get. But do you agree we could have hundreds of different accounts?
Yes, you can.
Right. Okay, so if I just give you one example, if I talk about sales, what is sales? Which of the 6?
Yeah, it's income.
Good, yeah, sales is an income. Let's talk about equipment. What is that?
An asset.
Good. Okay, let's talk about creditors. What is that?
No, it's not capital.
Isn't it a liability?
Correct, yeah, creditors is a liability. Good. What about stationery?
Expense.
That's expense, yeah.
Expense, great. Okay, so you're really good at identifying which of these accounts we've got in terms of the 4. Because from a 1502 point of view, that's what they actually tested quite a lot. They tested your ability to identify what things are. So they spoke about cash being paid to a supplier. Then you would have to remember, well, if cash is being paid to a supplier, my bank will decrease, okay? And if I'm paying the supplier, my liability will decrease. Do you agree?
Yeah.
Okay, so that was the basics in terms of the analysis. So understanding what happened in terms of different transactions. In this module, you'll still be doing that, but they're going to take it a step further, because now, instead of only having one type of capital account and one type of drawing account, we'll have several different capital accounts and we'll have several different drawing accounts. Okay, so do you see how we're expanding on the basics?
Yeah.
Yeah.
Okay, so for example, if I asked you to give me different assets, you could probably give me equipment, you could give me property, you could give me vehicles. Do you agree those are all assets?
Yeah, they are.
Yes. Okay, so in the past, you were given different accounts and you had to know what they are. So the same thing happens in this module, except you're going to be doing that for capital. So we're going to have different types of capital. But do you agree capital is still capital?
Yes, it is.
Okay, and an asset is still an asset. Do you agree?
Yes, it is.
Okay, so it doesn't matter what the asset is. If the asset is equipment, property, or vehicles, do you agree they're all still assets?
They are still
Yeah.
assets.
And will they all follow the same rule?
Yes.
Yeah.
Great. Okay, so that's what we're going to be doing. We're going to be learning about some new accounts, and we're going to have to build on what we already know. So this is the key, and it'll always be key. Remember, these rules never ever change. You're going to use it now, you're going to use it later, you're going to use it forever in terms of the accounting that you do. Okay.
Yeah.
Alright, I've given you a bit more background. If you go through the textbook, you'll see the textbook talks a bit more about the theory. Again, theory is not an emphasis in terms of the exams, but I have seen multiple choice questions come up. So the theory that you have here could be a multiple choice question, but it'll never ever be a long question. They're not going to ask you to write an essay or to write a paragraph about any of these characteristics. You just need to be familiar with the background. Okay, so why are we presenting information? Well, it's to make decisions. And if we're making decisions, those statements that we're going to be using, they need to be prepared with these characteristics in mind. So we need to have statements that are based on a going concern basis. Do you remember what that means?
It means if a business is going to carry on.
Correct. Okay, going concern means the business will continue to operate. Perfect. What is relevance?
How relevant the information is to the business.
Good. So do you agree relevance would be, is something material in terms of importance? So is it important enough to affect the decision making? That's what we need to decide. Okay,
Yeah.
and from an accounting point of view, well, at this point in time, everything that UNISA gives you, all right, will be relevant, but there are only 2 or 3 situations in this module where it won't be. So sometimes they do give you 1 or 2 things that you're actually not going to use. You're not going to need when it comes to the actual disclosure. And it's normally given in the notes. Okay, they normally give you additional information.
Okay, yeah.
Okay, faithful representation, things need to be accurate, needs to be truthful, needs to be reliable for the user. Comparability, we need to be able to compare one year to another, or different assets, or different companies. It needs to be comparable. Verifiability is the auditing, so some of you might be looking at auditing as a profession. Auditors do that, they verify that things have been done correctly.
Yeah.
Timeliness, that's important for our disclosure because the financial year is 12 months. So remember all those adjustments we did in 1502, all of that comes up again, and the only way we can do adjustments if we're looking at the last 12 months and the next 12 months.
Yeah.
And then understandability, do we understand the material that's being presented? And that comes back to your elements. Remember, equity is broken up into capital and drawings, and how does income and expenses affect equity? Do you remember?
Well, isn't it how much a company has to spend and how much a owner can withdraw from the company?
Good. Okay, so if you're looking at income and expenses, what's the difference between income and expenses? What do we get when we take income and we minus expenses?
Profit.
Perfect. Who's entitled to the profit?
The owner.
Exactly. And that's how income and expenses affect equity. So
Yeah.
there are 4 accounts that will affect equity: the income, the expenses, the capital, and the drawings. That's important because, as I said earlier, in this module, you'll learn about different capital accounts. You'll learn about different drawings accounts. So equity becomes a big focus. And this is quite an NB in terms of the exams. They'll normally always ask you to draw up a statement of changes in
Equity.
your SOCI. Before, they never really focused on that. And the reason for that is when you were tested on accounts in your first module, the FAC1601, we only had one owner. We had the sole proprietor.
Yeah.
So the sole proprietor is a one-man or woman business. So if we're looking at equity, the equity is very easy to present because there's just capital drawings, income, and expenses, and that's it. But now, when I have a partnership or when I have a CC or a company, do you agree I've got multiple owners, not one?
Yeah, you have more than one.
Exactly. And that's why the disclosure in terms of equity is more important for those types of businesses rather than the sole proprietor, because you've got more owners. And when you have more owners in a business, the disclosure needs to be more detailed. And that's why the SOCIs that you'll see in this module are going to be a lot more detailed. Before, you just had one column, and the column was for capital, because capital for a sole proprietor is capital. There's nothing else. But for all the other types of businesses, you will have other types of capital, you'll have other types of drawings, and all of that needs to be disclosed in the statement of changes in equity. Okay.
Yeah.
All right, those are the statements. You spoke about them, you mentioned some of them earlier. I just want to highlight 1 or 2 things here in terms of the relevance and the importance. Okay, so the first bit is the importance. Why is the statement of comprehensive income important?
Because you have to know how much income a company has.
And why do you want to know that? What do I do with knowing all the income?
You can do a financial statement.
Okay, which is the statement of comprehensive income. So if I know all the income and I know all the expenses, then what can I do?
Check if you have a profit or loss.
Exactly. Okay, so income and expenses determine the profitability of the company.
Yeah.
Okay, so how profitable is the company or not? Okay, so that's a ratio. Later on, you'll learn a bit about ratios. That touches a little bit on the finance, because the finance is more on the using of information to make decisions. It's not so much on the creating information. So if you do any fin modules, FIN, it's going to be more the decision making, not so much on the presentation in terms of how do I draw up the statements. There, we take it for granted that the statements have been prepared correctly, and we use the statements then to make decisions. So in this module, you cover some of that later. You'll see the last few chapters are short, and they cover small sections like profitability and ratios. Okay, so they look at how do we actually make some decisions, and that's where you need those financial calculators, because you do a bit of time value of money, and you also do some ratio calculations. So that's the first one. The second statement of financial position. Why is it important?
You can see the financial position of the company.
And what makes up the financial position? Which
Income,
accounts? Which elements?
assets,
And?
liabilities.
Correct. So you've got those two which form part of the financial position. Why? Because remember the basic accounting equation, if I put the O there, A minus L gives me owner's
Equity.
Okay, so financial position is focusing on the A and the L. It's focusing on those two. Okay, SOCI, what do I record there?
Capital and drawings.
Yes, okay, simple. Because it relates to who? The owner. So if I have one owner, that owner will be entitled to everything. If I have multiple owners,
It has to be split up.
it needs to be shared. Yes, exactly. Good. And then you've got the statement of cash flow, which is a new statement, and that statement will be covered in this module, which is FAC1601. First time you've seen the statement, you've seen something similar to it in the past. You've seen a bank recon. Do you remember what the bank recon does?
Yeah.
What does it do?
It basically balances off.
And you do your adjustments there.
Yeah.
Yes, and what account are you focusing on in a bank recon?
Bank statements.
Yes, the bank. Yeah, the bank statement and the bank general ledger. So when we look at cash flow, we're going to be doing the exact same thing. We're going to keep it simple. We're going to use something you know to apply to something you don't. So when looking at a cash flow, just think of it as like a bank recon, where I need to find what? Bank. And I need to know how much cash is sitting in the actual bank. What cash is coming in and what cash is going out. So that's all I'm going to be doing in a statement of cash flow. Normally students struggle with most of that study unit. They tend to find the statement of cash flow quite difficult to do. It's because your accounting knowledge has grown, so you forget a bit about the basic principles in terms of cash coming in and cash going out.
Oh.
Okay, so when we get to that module, or that study unit rather, we'll keep it simple. We're just going to be focusing on bank. That's it. Don't overcomplicate something that's quite simple. Just think about, is cash coming in or is cash going out, and that's what we're trying to analyze. Okay. Everyone okay so far?
Yeah.
Right, and the important bit is obviously disclosure. We know how important disclosure is because everything you do in this module is going to be a statement. Okay,
Yeah.
the way we show the information. Even in the exam, even in the assignment, it's going to be based on disclosure. It's going to be how do you disclose this? How do you disclose that? It's always presentation.
Yeah.
All right, perfect. And then just the last bit here, and then we'll take a quick break, and then we'll come back and we'll look at the last bit. Practical applications, important. It doesn't matter which module you've done. You've all done this one, 1502, because that's the most comprehensive in terms of your accounting theory when it comes to a first year level. We've looked at different principles, and we've focused quite a bit about disclosure. Just something that you need to always keep in mind is principles. Okay, so these basics you're going to see, we're going to be using it time and time and time again. Important is principles. So what must we always do right at the beginning?
Know which element it is.
Correct. If I know what something is, will I know how to treat it?
Yes.
Yeah.
Yes. Okay, so that's the whole debit and credit rule, the double entry, assets, liabilities, all those definitions. Okay, I'm going to revise some of it with you today, and then we'll obviously expand and continue doing that going forward. We'll learn about different accounts, but all accounts will always be one of the 6 elements.
Yeah.
Okay. Then we've got timing. Is timing important?
Very.
Yeah.
So how do we know what the time is in a question?
By checking how it's paid.
Checking, to say that again, sorry?
Checking how it's paid.
How it's paid.
Yeah, well, something is, like if it's accrued income or if it's a prepaid expense.
Okay, so what makes something accrued or prepaid?
Accounts.
It's the when. Do you agree?
Okay.
So
Yeah.
if something is accrued or prepaid, do you agree it's the when I paid it?
Yeah.
Okay, so if I'm looking at a question, how do I know what the time is?
By checking the dates of it.
Exactly. You need to know what the financial year is. And how long is the financial year?
12 months.
Exactly. So very important is start and end. If I know where we started and I know where we end, will I be able to prepare the books for the financial year?
Yes.
Yes, and that's the actual disclosure. So disclosure will be for those 12 months from start to end. Are we going to worry about anything at the, or let's say anything after the end?
No.
No, unless it affects the current
Okay.
12 months. Okay, good. Depreciation we'll look at again, and obviously format is key from a presentation point of view. It's important to present information correctly. Why?
So it's accurate for the person who's looking at it.
Exactly, it's for users to make decision. Good. Okay. Alright, so that's where we're going to pause. Let's take a quick break, and then let's come back and then we'll look at some more basic principles that we've covered before, and just to get you guys thinking about the whole element scenario. Okay, focusing on recognition rather than the actual memorying by parrot fashion. Okay, so more understanding is key.